Gold opened the day on a flat note and trying to now retrace a little on the upside. On the last trading session, we have seen gold taking a dip towards 2014-2015 levels before closing at around 2020. Now see, look at the three candles here. Clearly suggests support levels are intact and a sell entry is only below 2014 levels, below which you can expect similar size of candle where the prices might try to reverse. However, right now if you look at the movement, it is trying to trade on the upside. Now, we will see more into details with the help of charts and indicators, and this is the first update for the day. The next update will also be released before the US session. Do watch that update as well, and if you are new to the channel, do subscribe to the channel to get the latest updates. Do like, share and comment as well. Let's start. First, look at the hourly chart. See, if you look at the pattern here, drop, retracement, drop, it is retracing, lower highs here, and see the prices were divergent from the 20 period. It is trying to converge towards the 20 and 50 period moving average, sitting at around 2025 2027 zone, and then the median of the Bollinger Bands in 2030. So this zone completely between 2025 and 2030 is going to be a clear resistance zone for gold. Any point of time, if you see the price is staying beyond 2035-36 levels, consider that as a reversal and the prices might continue to stay bullish above those levels. Stochastic rising, MACD is bearish, trying to converge. It has seen a good bearish move so far, and possibly a convergent crossover. May look forward to a retracement from the current levels. RSI rising, coming to 2-hour charts. Look at 2-hour charts, 3 to 4 candles getting support here at 2014-2015 levels, trying to rise. Wait for it to stay above 2025-27 zone. See, this is going to remain a clear-cut resistance zone. Look at 2030 levels here, 2032 levels, 2025 levels. So this zone completely 2025, 2027, 30, 32. Very, very strong levels are here. And definitely gold will find it tough to break past by this zone. Any point of time, if it stays above 35-36, you can consider that as a reversal. As long as 2035 2036 is not taken for the day, you should not treat this as reversal. It is still to be considered as a retracement after the drop, and possibly from here it can again try to look downwards. Stochastic oversold, trying to reverse, trying to come out of the oversold zone. MACD is trading with extreme divergence and bearishness. We can see it converging, possibility adjust. RSI rising as well, coming to 3 hour. Likewise, on the 3-hour charts, higher highs are observed, and thus again and again we are emphasizing on this zone. This is going to be clear-cut resistance for gold to break past by. So yes, if this is a reversal or a retracement, for this we need to wait for it to break out beyond first 2035 2036 zone, and then further to that on the upside greater resistances exist at around 2040 2045. Stochastic oversold, trying to recover. MACD is trading bearish on the 3-hour charts here, but the candle sizes have flattened, so possibility of a little retracement exists before it looks forward to diverge and continue to trade bearish. Now see lower highs here, lower lows here, and it is crossed over at the peak. We have to wait for it to crossover for a buying entry. Right now it is still trading bearish, and it has a potential for it to continue on the downside. Furthermore, look at this lower highs, lower lows, and it can try to hit the bottom as well. RSI was overbought and it has cooled down a bit, come to comfortable levels. Coming to 4-hour, look at 4-hour charts. Flat bottom here suggests that there is a greater support. Thus any point of time price is staying below 2014 2013 levels, we have to go selling gold here below 2014 2013 zone. We can look forward to a stronger move on the downside, which may take the prices towards 2008 and 2004. In fact, 2000 levels cannot be denied here. Yes, price is staying below 2014 2013 levels certainly will bring the bears out here. The stochastic is oversold. It can try to recover a bit, and that is why I am saying a little retracement on the upside cannot be denied towards 2027 2032 levels here. Very strong resistance will be observed here. Now look at MACD on the 4-hour charts. Likewise, MACD on the 4-hour charts, lower highs, lower lows suggest that this was the bearish move. It has retraced here, traded with divergence, now crossed over only 2 red candles, which means there is a probability for further red candles from the current levels. So we have to watch out with caution. Any retracement on the upside can further bring the bears out here. RSI has come to comfortable zone. Coming to the daily. Now before we proceed to the daily charts, if you want to learn this art of trading, You can join my 28th mentorship batch starting in January 2024. Register yourself now itself. Also, you can join my Signals channel on Telegram, and do not miss to register for the consultations package, where 4 webinars and 2 consultations are coming at a very nominal cost. One single consultation can change your entire trading and can recover the investment in a single go. Just register for it. Visit my platform www.forexfunda.com or visit my free Telegram channel for more details. You can also ping me via Telegram or email for more further details. Now, coming to the daily chart, look at the daily charts, 20 period moving average. Very strong support here at 2016-2015 levels. With that as support, we have seen prices rising. What it is trying to do, it is aspiring to achieve the median of the Bollinger Bands towards 2028 levels, and further to that, in fact, we can see it moving towards this resistance zone where it has find stronger resistance. Thus, it is right now retracing, not a reversal. Possibility for gold to move towards 2027, 2030, 2032 exists, but it is still not confirmed as a bullish reversal. Once the price stays above 2035, 36 and then 2040 levels, you can treat this as a reversal, else prices might again try to trade bearish. The stochastic has seen the peak, it is trying to look down. MACD is still bearish. It has started to converge, but look at the crossover. First of all, I have mentioned several times, I am highlighting it again and again, double top. Since then, a bearishness. So a possibility for it to continue with the downside on the daily charts and just more RSI trading. Looking at this, you have to be very cautious and alert. Yes, those who want to take a little pips from the current levels can do so. It can try to find its resistance somewhere in between 2025, 27, 28, then 30, 32 nearby resistances, and only bullish confirmation once it stays above 35, 36, chances for which appears to be less, and the prices might reverse any point of time below 20, 35, 36. Be careful around those levels. And on the downside, a selling entry is below 2014 levels. Below 2014 levels is where little bearishness towards 2008, 2010, and then in fact we can look forward towards 2000 levels as well. Take your trades accordingly. Like, share, subscribe, and comment. Join my mentorship batch, Signals channel, and webinar consultation. Visit my platform forexfunda.com or my free Telegram channel, and yes, you can also reach me over Telegram or email for more details. See you again before the US session for that update as well. Thank you very much.